Hello, everyone. This is Noah and John, and we are from UrbanDigs, and we are talking Manhattan. And today we got Russ Putterman here, Johnny, from Keller Williams, New York City.
Yes,
we love Russ. You know, he does a ton of deals. He knows what's going on. He's a production machine. But enough about Russ. Let's just go and talk to him and see what he has to say for himself, right, Johnny?
That's right. It's a great idea, Noah. Jump into it.
All right. So, Russ, do me a favor. Let's just start general, and then we'll slowly get into more details as this podcast goes on. But what are you seeing high level? What's going on in the markets, and where are we at?
Sure. And I love you guys too, by the way. I mean, it goes without saying, right? So look, I mean, you know, where we are now, you know, we're almost on the anniversary. I remember last year on St. Patrick's Day, you know, what was happening. Are people really still going out? That can't be a thing. Like it's just crazy that it's a year later, but certainly where the market is now compared to where we were a year ago is just night and day, right? A year ago, we're heading into fear, not sure what's going to happen. I remember literally in the middle of a negotiation on an apartment on the Upper West Side, kind of at a high price point. And, you know, my buyer's like, maybe we should just wait one more week, right? And see sort of how things shake out. And, you know, it's been a ride. But the market is doing pretty well. There's a ton of velocity out there. There are deals that are being made at all price points. I think you guys have touched on, you know, through your weekly updates that this below $2 million price point is certainly outperforming, you know, higher price points. I think that the gap between the bid and ask is narrowing. I think that there are more opportunities for sellers in certain situations in certain submarkets to stay more firm on their pricing. You know, I think that with the increase is in interest rates and the continued increase in interest rates the rest of this year is really lighting a fire under some buyers that may have been, you know, waiting by the sidelines. So there's a lot of activity out there.
Yeah, that's true. And I'm just curious, sorry, Noah, to step on your toes there, but just curious, Russ, if you could talk to us about how that translates into negotiability in today's market. I mean, are buyers still in the driver's seat or sellers have a little bit more traction here?
There's no doubt that it's still a buyer's market, but I do think, again, in certain situations that sellers do have more leverage than they did. We're actually negotiating two deals right now at around the $1 million price point where we went in, you know, pretty well below the asking price, but within the sort of, you know, post-COVID discount, 8 to 10%. And one of them responded at ask because they had multiple offers, and the other one came down 2%. Right. So, you know, it's interesting out there.
And so that's important to understand. There's a difference between price action and liquidity, right? And I think what you're talking about right now is liquidity. There's a bunch of liquidity out there. It seems to me that prices or bids, I should say, bids right now are way more aggressive than they were a year ago, right? Obviously, the buyers are starting to wake up, I guess. But a lot of buyers are saying that they fear they missed it. They fear they missed it. I'm trying to say that you didn't miss it yet. Like the prices are off the lows. You mentioned the post-COVID discount of 8 to 10%. It looks like that's eroding away as we speak, but we don't quite know if it's going to sustain itself or how far. You know what I'm saying?
Yeah, for sure. And you're right. I've experienced a little bit of all that. You know, in speaking with an investor actually from, you know, the April-May timeframe where they were like, okay, show me the blood in the water deal, show me the blood in the water deal. And at the time I was showing them things that were 20% below asking price that they could have gotten deals done, and that wasn't enough, right? And now, you know, I actually sent them an email earlier this week and saying, look, if New York City is the place for you, I urge you to get this done sooner than later because, you know, and he sort of felt like he missed the boat at that point. So it's like, you know.
And if you felt like you missed the boat at that point, I mean, how do these buyers feel today? And that's the whole thing. Is like prices are just off the fear trade's not there anymore.
Yeah, no, I agree. But look, in any market, right, there's a deal to be had. And if you're going to live somewhere, right, and you need to live somewhere, you know, you'll find the right property for you at the price point that makes sense. And there's, like we said earlier, interest rates are a real factor, right? For every point that an interest rate goes up, right, which is what we're sort of talking about between the middle of last year and what could be the end of next year. I mean, that's an effective 10%, you know, differential in your purchase price.
Yeah, that's a great point. And you know, the other thing that we didn't really talk about is these discounts that everyone sort of, you know, marks in their brain as where the market is. during COVID, they were very idiosyncratic. It was mainly about who was specifically selling that unit and the attributes of the unit themselves. And then, one trade crosses 20% down. And everyone's like, oh, 20% down, that's the market for me. But I'm curious, when you look at, because the deals are still out there. And one of the things that we did a piece a couple of weeks ago or so about how unrenovated units are basically just getting punished by the market, and renovated units are sort of seeing a premium. And I'm wondering if you could talk to that when you talk about negotiation and where buyers are, if that's something in buyers' minds right now, that they just don't want to handle work, but there are some buyers that are like, yeah, I'll take it on for that extra discount.
Yeah, I would say the majority of the buyers that we come across, they want the turnkey asset, right? Especially now where they think they can buy it and still buy it at a discount, right? And is the renovated unit that they're going to have to put time and energy into, are they getting enough of a discount from that? I definitely see more of our buyers that want to go in, do little work, and sort of, be out on the other side of it.
Hey, Russ, could you talk about inventory for a moment? Are your buyers complaining that there's not that many options out there, or are they asking you, or when are the units going to come on, or are they kind of comfortable with the options that they have right now?
Yeah, look, I think that it would be great to say that there's an inventory problem. I'm not experiencing that yet, that there's an inventory shortage, quite frankly. I think that buyers out there, they have, a lot of different options. They have a lot of things to look at. I think what they are feeling, however, is more pressure that with the things that they like, they're not the only one in the game anymore, right? So it's, they need to make a move if they're gonna make a move. And look, I think to that end, if you're working on a deal and you have a buyer that likes a particular deal, get on the phone with these agents, right? Get on the phone with the agent that's on the other side, and understand what the landscape is, so you can put your buyer in the best position to land the deal if it's the one they want.
That's interesting. Let me just jump into that, because I think you raised an interesting point. You talked about pressure and buyers feeling the pressure. And everyone knows the new rules for open houses, and you see the lines here and there. And I'm curious, as an agent, bringing buyers to an open house in which you walk in and you got gloves and booties on, and you're the only person there. How are you instilling a sense that, hey, listen, yeah, the market is actually moving right now. Just because you're the only person in this unit right now, trust me, there are other people that want to see it. And I'm also on the sell side. How do you sort of, get sellers to understand that, the market is, not to be aspirationally priced, but to sort of price realistically?
Yeah. I mean, look, I think for the seller side, it's easier, quite honestly. I mean, it's the information is so transparent what's out there, right? And although I really do believe that the bark is way worse than the bite, if you're looking at New York City from an outside of New York City perspective, the sellers that own assets in Manhattan, I mean, they know what's going on, right? So I don't think that conversation is much of a challenge, quite frankly. But look, I think when you're having a price conversation with them, say, listen, this is the range, because pricing is a challenge to begin with, right? Because where you're going to price it and where something actually transacts are two very different things, right? And a seller always wants to hear the higher number, right? That's not necessarily the number that they're going to transact on. So I think it's important when you're speaking to these sellers to give them, show them the comps, help them understand, where we're at. Now, based upon the comps, where do you think we should be priced? Right? Let them self-discover a little bit, right? And then that helps a lot in the conversation. And then, the one thing I would do in managing their expectation is say that buyers are still coming in below the asking price wherever we land here. We want to price this at a point where the market's going to see us, okay? And at the same time, be prepared to have a bit of a back and forth on the deal. It's just the market that we're in right now. If you don't have to be a seller in today's market, then maybe that's not the best time for you to sell, right? But people need to buy and sell and move, based upon what they have to do.
Yeah, I love the self-discover comment that you made right there.
Yeah.
Everyone, and John, you made the case before that it's the idiosyncrasies that existed back then. I mean, we don't know how many people are really, they have to sell. They have a complete desperate timeliness to sell. I mean, luckily, if you have a desperate timeliness to sell, you're selling in a much better environment today than it was a year ago. And we like to say, if you're not selling right now, it's either a market problem, a product problem, or a price problem. It's one of those three problems. So like if you're a product problem, if you're a first floor, back unrenovated unit, yeah, that's a problem. Most units are not that situation. So it's either a market problem or a price problem. The market's fine right now, right? So it's a price problem. So Russ, let me ask you this.
Sure.
I got a seller. we thought we priced right? That's a very normal situation. We thought we had the price right. You went in there with the price, the seller wanted a little more, but you convinced them to price right, and you're still not getting the traffic. How do you handle that situation right now?
It's tough. It's tough. I'm actually in that situation now. We have a couple of lower price listings that are actually not getting the traction that some of the, so like that $1 million to $2 million price point is extremely active. Okay. Mm-hmm. And from what we're seeing in things that are priced below in some studios, it's a tougher sled, which is interesting, right? Who's buying that, who's coming in, and it's still a price conversation though, at the end of the day. I mean, it's about the pricing. We had one deal where we were very, very close on the dollars between the bid and the ask, ultimately, and after, a back and forth, and the seller chose not to move forward with the deal. Okay, fine. And we chose to rent it instead. I mean, and that's the avenue, because this bid was good enough that, maybe we should have moved forward, and it's your choice. If we're not going to do that, fine. What's the other avenue? And, in other situations, I really do think it is price. I mean, there's only so much that you can do, it's an apartment, right? You can't extend it. You can't change the outdoor space if it doesn't have it. There's only so much that you can do. So ultimately it's a price conversation, which is a challenge.
In the deals that you're doing, sorry, John, if you have a question here,
yeah, go ahead.
The deals that you're actually doing and representing on the buy side right now that you're failing to get, you mentioned one before that you put in a reasonable bid in and they only came down 2% or whatever. But think about the other deals. How far off are you, do you think? I mean, are you a couple of basis points away from a deal failing, or is it wider than that?
Yeah, it's close. There's been a few close deals where just sellers refuse to budge, and buyers are taking the position that, like, how can they not be budging at this number? And we're advising them, look, I mean, you're so close on this deal, and the interest rate conversation is actually helping a lot right now, because that's meaningful to say, okay, are you going to wait 4 months, find something else, but it's going to net effective cost you the same thing versus getting into what you love now? But it's a real thing, and they're close.
Sellers refusing to budge. I mean, I guess, John, sellers have all the information. Like the buyers,
it's true, but it's it's one of the things that we've seen is that there's activity is not a uniform thing. Buyers are attracted to some things and not to others, and especially if you've been on the market for a while, then even if you price back at market after say 120 days on the market, you're still going to get discounted because now you're sort of you're stale. Yeah. But let me shift a little bit, Russ, because
before you get there, John, one more thing. But this is also why it's so important to have good conversations with the agents that you're working with, right? Because so much of life in general is about managing expectations, and it's no different, and especially so in these real estate transactions, because sometimes if you set the wrong expectation, you can, you're setting yourself up for failure from the get-go, right? But if you're having good, transparent, open conversations, both with your clients and with the other agents, to help get everyone to the same place, it can really, help people get out of their own way, quite frankly.
No, that's an excellent point. It's a great transition, because the next thing I want to talk about was sort of on the investor side. And it's an even more opaque market than the actual sales side, because you're dealing with, if you're talking about rents, and then you're talking about who knows what the future holds. And I'm curious, how are you handling investors these days? How are you managing their expectations? What are they looking for?
It's interesting, because so much of my business historically has been doing investor side condo unit deals. And a large majority of that was foreign investment, and so much of that is dried up now. Through the pandemic, people aren't coming here. They're what's going to happen with New York, et cetera. So it's a challenge. But one of the biggest issue out there right now is the ability to rent it, right? Even though you're going to get this price, what's the cap rate look like, right? And a lot of the people that are buying this stuff are diversifying away from a bond portfolio or some other income producing asset, potentially understanding that the play in New York is more of an appreciation play. But a year and a half ago, you may have been looking at a 2.5 to a 3.5 cap on a condo unit in Manhattan that maybe, if you find like a gem, can touch 4. Now you're more like the 1.5 to 2.5 with a gem to touch 2.8 to 2.9. So it's hard.
Yeah, no, it's such an interesting conversation, this cap rate, because the rental market has gotten killed. The rental market has gotten killed.
However, what's also very interesting is the below $2 million market is performing so well without all of that investment, right? Relatively speaking. So remember, and I know we've touched on this before, a year ago, or now a year and a month and a half ago, we were coming out of a buyer's market that seemed to, be lasting a few years, and it was really starting to come out, and then COVID hit, right? So I think that you're seeing that local demand still there, right? Because that's who's buying a lot of this stuff. So if you are an investor who's not as concerned about what today's cap rate is, and you have a 5 to 7 year time horizon, you might do very well on the appreciation of that asset, over that period of time.
Well, not only that, I think you're buying in now, and I don't think rents are going to go up in the near term. This is sort of my own speculation, but I do think a year from now, 2 years from now, I think they will be higher. So yes, you're buying a low cap rate now, but I think you'll get the benefit of appreciation as well as you're going to get an increased cap rate because the rents are going up.
Sure.
By the end of your term.
It's all about that commercial. Once you start to see the commercial and the retail start to come back, you're going to see rentals come back in a big way. You're going to see it's I don't think it's going to be this slow sledging turnaround.
Yeah.
I think it will be a V. I agree with John. I think we got some time because I think commercial and retail still has to work through its problems. So this could be a 22, 23, 24 and beyond phenomena, right? Kind of thing. But again, inflation, deflation, John, I mean, they printed $7 trillion so far. They printed 1.2 in 2009. That led to 2010, 11, 12, 13, 14, 15, an amazing period for Manhattan real estate, right? 7 trillion now, look ahead. And urban didn't do what suburban did. We're still kind of out. We're just getting out of the gutter.
Sorry, I'd just like to respond to Noah before I get to you, Russ. So two things. So I think that on the rental side and the investor side, I still think even though it's somewhat attractive on the medium long-term prospect, I think there's an enormous amount of political risk, and that sort of weighs down expectations. On the Noah side, one of the interesting things about today's market compared to the rise up to the peak was fueled by a lack of inventory, which we're not really suffering. We have a decent amount of inventory and we're still going gangbusters. So that's an interesting dynamic. And now if I could, shift, which I know we're running short on time here, Russ, but if I could shift to sort of how do the dynamics, because I know you do a lot of work in the suburbs in New Jersey and Long Island, and I'm curious, how does that dynamic of the suburb compare to those in the city? Because we know the suburbs took off hot, right at the peak of COVID when, people were looking for space. Are those markets still running hot, and how do they compare to the city?
Yeah, they're on fire. It's almost like the exact opposite thing, right? In New York City right now, you want a super motivated, ready, willing, and able buyer ready to go. In the suburbs, there's such an overflow of that you need the product. But yeah, we do, and I have great partners in both Long Island and Monmouth County, New Jersey, and the feedback and the conversations are, it's not even about necessarily getting a listing. It's like, okay, Mr. Buyer, I know this off-market deal. I'll just take you there right now and let's get it done, right? Something goes on the market, and if it's priced remotely well, it's gone in 3 days. Literally gone in 3 days. We have a client actually moving out from out of state who wants to come into an area in New Jersey, and they have $1.5 million budget, and they're expanding their search to towns they wouldn't necessarily go to because, number one, they can't get here quick enough to buy it, and number two, it just goes so quickly. You have to be so competitive, and you're dealing with cash buyers, and in the suburbs there are things like inspections, right? There's contingencies that are it's a little more intricate. And by the way, doing deals in Manhattan is so much better.
And a much different price point usually. I mean, listen, I don't know how much that trade goes on for. I mean, that's those suburban markets. I mean, maybe they got another 8 months or a year left into them, but you will see a reversal.
There's no inventory. That's the problem.
Yeah, but there was no inventory in 2006, 2007 as well. And then, these things climb a wall of worry, and something happens and it kind of changes things. I do see lumber prices. I see what you're talking about. And
it's not just that, it's also new home starts, right? New home starts from 2009 through today really haven't hit the minimums they need to. I think just last year they did. So it'll be interesting to see the way it plays for sure.
Yeah, I still think there'll be a rotation at some point. But listen, we're ending down here. Let's do final thoughts here. Russ, I am a professional agent. I have my buyers out there. What am I telling my buyers right now?
Yeah, I would tell your buyers, like, listen, there's a lot more demand out there than there was, 6-8 months ago, for sure. You know, make sure you make sure you still have the things lined up that you need to. You have your pre-approvals ready to go. You have your proof of funds ready to go. Have everything that you need. Put yourself in a position where you can win the bid. Having your attorney lined up when you're putting in offers. I mean, these things are starting to become more and more important because you want the seller to know that you're real and ready to go. And then just make sure you have real honest conversations with them about where pricing is, what's going on. Show them the comps. Show them what's active on the market right now also, and put them in a position to win.
Yeah, present strong. What would you tell the sellers?
I would tell sellers to remain realistic in where pricing is, right? Mm-hmm. We're going to put this on the market at whatever price. And this conversation isn't that much different in any market, quite frankly. But look, we're going to put this on the market at this price. If we're not getting the traction that we need to, this is the market speaking to us. Okay. And we need to listen so that, we're not chasing the price down, and we can be in a position, to get that bid that we want to win. Be prepared to negotiate off whatever number we're going to be asking, because that's still the market that we're in. And at the same time, we've seen a bit of an uptick in activity. So yeah. There may be more than one, person at the dance. And, as a big caveat to that, it's very much price point driven, right? I'm having a different conversation with $1.5 million seller than I am with a $7.5 million seller.
Right.
Good stuff.
I love it. Russ Putterman, Keller Williams, New York City. You are amazing. Thank you so much. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. This has been Talking Manhattan, and we'll catch you next time.